everyone. Welcome to today's Founder in Climate series. I'm Nagashri. I'm a board member at Women in Cleantech and chair of the Entrepreneurship Committee. I'm really excited to introduce Cece. Before that, if you guys don't already know, I would love to share a few things about Women in Cleantech as well as the Entrepreneurship Committee. And so Women in Cleantech is a nonprofit, and we've officially received a 501(c) standing. We used to be a 501 C6. And with that, we have now the ability to seek grants. And so we're really excited about that. Women in Cleantech was founded in 2011 by Lisa and Pinkerton. And the goal was to kind of stand for the 4 pillars of WCS, which is to improve parity among women in clean tech and sustainability, to help organize events where we can connect with each other and bring our thought leadership, as well as form local communities where we connect. And the Entrepreneurship Committee plans on doing the same for the women founders, is help improve the parity of women within this exciting entrepreneurial effort, and also create events like this where we're supporting you all in learning from experts and from VCs like Cece on what they look for in companies to finance. We have a few chapters across the world, and we have about 5,000 members who are part of WCS. And we have a chapter here in San Francisco, in LA, in New York. We have a European chapter, and we've recently opened up a Portland and are working on a Denver and a New England chapter. So if you are anywhere close to those regions, I highly encourage you guys to attend local in-person events. With that, a little bit about myself. I have a background of 15 plus years in clean tech and sustainability. I used to be an architect and build, large infrastructure projects, ground up, and green buildings. And I pivoted to renewable energy and storage. I was with Tesla for about 6 years doing business and operations, scaling their Powerwall solar business. And then more recently, I joined Uplight as a partnership manager, where Uplight is a SaaS-based platform that helps aggregate clean energy to utilities. And I'm really excited to kind of, bring together this founder series for you all. With further ado, I'd love Cece to introduce herself, and just a small anecdote of how connections form. Cece and I met at the Verge conference while we were at a booth of a last pitch competition participant. And that's how I got introduced to her, and I connected with her offline, and we have so much in common. So I would love Cece to unmute and introduce herself, and we can get started with a fireside chat. Few housekeeping tips. Please feel free to drop in your LinkedIn in the chat, and then you feel free to also drop your questions in the chat, and we'll have a segment to the very end about at 11:45 when you can unmute and ask questions to Cece. So with that, Cece, over to you.
Thank you, Nagarathri, for the kind introduction, and glad to see everyone here. So Cece Zhao, currently with Vectors Capital. So we are a venture firm based here in San Francisco, and we focus on deep tech climate investment. So mostly early stage startup, pre-seed, Series A. I came from, I would say, background in finance. So I have been capital market my entire career, always fascinated about essentially mobilizing capital market to solve problem. And as of late, basically climate problems. And my career has been built at the intersection of capital market, technology, and also climate. So prior to Vectors Capital, I was at AES, which is a clean energy developer. And I did project finance there, which is really focusing on deployment from the financing optimization perspective. And prior to that, I was basically an investor in real assets. So invested in commodity, energy, and that's honestly how I got into clean energy to start with. So definitely happy to share more about my experience today, and great to see so many lovely faces here.
Thank you so much, Cece. With that, we'll begin our conversation. Um, Looking at your resume, you've built a career in Wall Street, renewable energy, and now climate investment. Was there a pivotal moment that inspired you to focus on climate, and what continues to motivate your work and surprise you in this space?
Yeah, definitely. Um, so I would say it's probably more kind of like a gradual process rather than a specific pivotal moment. So for the first, I would say maybe 3 or 4 years of my career, I was doing the traditional kind of investing. Really you can think of like hedge fund, like focusing on financial returns. And I definitely enjoy I would say the problem solving aspect of the job, but it's just that at the end of the day, I always worry, or maybe not worry, but I always ask myself the question like, what is it for? So as mentioned, I was investing in real assets, commodity, energy markets. So um, exploring clean energy back then was almost like a very natural segmentation from what I was doing already. And in addition to that, I think it was 2018 when a lot of companies were looking at ESG, environmental, social, and governance investing. And I definitely took a look in that field. And what I realized is that a lot of the practice, at least back then, focused really on risk management. And to me, when I think about the field, when I think about, the energy transition and all that, I really see this as an investment opportunity. I saw a lot of upside. And that's when I decided to really pivot my career in this direction because I feel there are tons of opportunity there, and there are tons we can do, both from the innovation and deployment perspective. And that's how I basically went down the rabbit hole of clean energy.
Great. Yeah, that sounds fascinating, Cece. And that it's like it's a gradual transition. It's not a pivot. I like that you focus on that. And then you've told me that Vector Capital itself is a startup. And you invest in startups. So how does that shape the lens in which you view startups? Like, how does that inform you?
Yeah. Thank you so much for asking the question. Indeed, so Vectors is pretty small. So we have a very small full-time team, and the firm itself started in 2019 as an angel group, and we turned that into a fund in 2024, or in 2023. So still relatively young in terms of the vintage years. And because of that, we spend a lot of time not just investing in the startup, but also building our team, building the business. We also have to do a lot of go-to-market ourselves. We have to build our own brand. We have to, organize our own events and essentially mobilize a community. And honestly, a lot of the work we're doing are very similar to founders. So that gives us a lot of sympathy of, what the day-to-day is like for founders. When founders come to us asking for, oh, how can we prioritize? We have so many things we need to do. And we give them advice. This is the system we use. This is tools we use. This is how we prioritize our day-to-day. And also when founders, talk about the challenge they face in terms of the go-to-market, especially because of a lot of the climate tech company are B2B, the sales cycle is very long. We also shares a lot of the practice we have as well, because we also have, our own partners. We also have our own go-to-market we need to do, and we navigate the same sales cycle as well. So I think that kind of experience really help us both understand what founders are going through and think about what kind of founders can really overcome a lot of the barriers that are structural in order to really succeed, and also help us give very tangible advice to companies that we're invested in or want to invest in.
Yeah, that's fascinating that you're able to provide that feedback from your own experience to startups. And so when you've looked at these startups, what do you think, from your own journey as being part of Vector Capital, which is a startup, and working with startups, what do you think differentiates, founders or companies that are successfully raising capital versus those that are struggling? Can you tell us, the nuances of what you see, where you've succeeded in getting the right traction, and then where you see founders as well find the right traction or fail, and then how do you support them when they fail? And
Yeah.
so I'd love to hear that.
Yeah, yeah, definitely. Um, it's definitely tough out there for sure. So I definitely want to first acknowledge this. And a lot of the climate technology or building hardware, right? So inherently this is hard. Um, One thing that I always tell funders is that the commercialization is very important. For a lot of the deep tech funders, they usually have great technology, and some of them are very technical. And when they go to market, sometimes the intuition they had is that, oh, I have this great technology, and that should basically stand on its own, but it's not. So commercialization has to be front and center when every founder sells its story. So you need to understand the market, the total market, and also you need to understand how to do risk. Because ultimately, that's what investors are looking for. As a venture investor, we understand when you come to us, there's no way that your technology is already fully de-risked. There's no way that you're at a very favorable unit economics already. But we need to see the roadmap. We need to see that you have a plan to get to where you want to be so that this become a scalable market solution that can bring scalable revenue, because that's ultimately what venture returns mean. So that's usually how I see a successful founder tell a successful story to fundraise. Now, on top of that, maybe one thing I would call out is that there are many investors out there. Finding the right investor is also very important. Some investors may be more in tuned to certain type of technology. Some investor may focus on, for example, industrial sector or let's say energy sector, or some investor are general investors who invest in multi-stage. So knowing what kind of investors are best for your startup is also very important.
Yeah, yeah, excellent. And you, like, I like you talking about like de-risking and understanding that. I'd love to dig in a little bit more on that. Is how do you think, in your view, early stage climate founders should think about commercialization risk, and how should they portray it while pitching it to investors?
Yeah. Um, Definitely never shy away from the risk. I think, like for investor, it's actually more assuring to hear that the funder recognize the risk and have a plan in mind about how to do risk, as I mentioned. And I think it's also very important to kind of differentiate different type of risk. So there's technology risk, there's product risk, there's market risk, and there's also specific for climate policy risk. And honestly, some sort of risk are hard to control, like macro risk. If we talk about policy, if we talk about tariff, those things are out of control. So the best you can do is to think about okay, how can we manage it? How can we hedge it? Now there are some risks that is in your control, like technology product. So how are you going to allocate your resources, given that most startup only have limited resources? How are you going to prioritize your resource so that you de-risk in a way that's most reasonable for your company that can unlock the most scalable return as much as possible? Time is money, and we need to see incremental gain. And whether that incremental gain happened on your product roadmap or it happens on the commercialization traction, those are the things that a startup has always had to think about, just so that they continue showing that milestone, that traction that investors want to see to have the conviction investing in you.
Yeah. Yeah, and in addition to, I still want to keep asking you the question on risk, because a lot of people are very good at projecting what's going well. But what
Mm.
are some other things beyond commercialization that you show, that you see within like the people who present to you, like they're honest and straightforward about certain things beyond
Mm.
commercialization, that they present as risks?
Mm. Competition. So I think,
Competition.
yeah, so competition is another thing. And like we want to see startups who come to us with a clarity about what the landscape look like. You want to see like what players are out there, whether they're big player, legacy players, or they're, startups who are, emerging or who are a little bit ahead of you. And we also want to hear like, oh, what are the synergy there? Because sometimes, oh yeah, sure, maybe they're building similar solution, but that doesn't mean that only one can exist. It might just mean that you guys want to go to market together. Maybe there are some partnerships there. And then maybe if it's some legacy company who are developing solution in the same vertical, that incumbent can potentially actually be the acquirer of your solution. So there's all those possibility. But competition is definitely something that a startup have to keep in mind. And investors want to hear that they have clarity and plan for that.
Yeah. And Cece, I've seen pitch decks where, majority of the people will show you in the top quadrant and they'll
Oh
show,
yeah.
but like the honesty of a startup which is just starting up, like how much do you assess their, you know, the mistakes they do in like that storytelling
Mm.
versus how they can own up during the pitches. So if you have any anecdotes, or you don't have to name names, but like
Mm.
how do you see people who like to oversell themselves and always positive and not
Oh.
show a realistic picture to you, and they make mistakes while telling you the correct picture?
Right, yeah, that's definitely a very good question. For sure, like we're always aware like startups will tell a very optimistic picture of the company and of their roadmap, which is good because honestly, that's what it takes to build a successful company, right? Like we want to see founders who are optimistic, who are passionate about the solutions. We want to see someone who, like despite all the doubts, believe in a successful future that they can create. So that's always good. Now, on the other side, it's just as you mentioned, sometimes they tend to oversell the story. And that's why due diligence is very important. So as investors, like obviously we'll talk to founders, we'll have, the screening call and all that, just to understand at a high level whether this is, a reasonable product, or whether the market is a good market, whether there is a potential product market fit there. But after that, we have to go into the data room and do a lot of, like investment analysis as well as different kind of reference calls, like talk to your maybe not customers, but people who you have, like initial content of intent with to work with, and other investors who we had talked to, just so that we have, the validation check and to make sure like we have basic facts in place.
Yeah, yeah, absolutely. So due diligence, both from your perspective as well as due diligence from the founders, is critical for kind of having the best match there. And like in, probing more on the question on how they present themselves, like how do you see balancing conviction? Like you mentioned, you are looking for positivity from the founders. So how do you think the best founders out there, they balance the conviction and adaptability of both market and technologies? I know it's hard to always paint a really positive picture.
Yeah.
What according to you is a good balance of both?
Yeah, I always feel that a good founder is someone who knows what they're good at or not good at. So some founders are very good at, for example, technology. Like they have a very special IP that's really going to unlock a lot of the new potential. Or some of the founders are very good at, for example, go-to-market commercialization. So I think from the conviction standpoint, the founder needs to know like what's the special secret ingredient that I'm bringing to the table. Now, on top of that, adaptivity is just it's a name of the game. Like we talk about startup, we know like startup always have to pivot at some point. And whether it's a full pivot because of the product market fit is not exactly what you expect, or it's just some sort of like little pivot you might have to expand into another vertical and all that. But that's just something that every startup should always be ready for. Like a lot of times, it's more important to execute fast and pivot than trying to really just like just keep pushing, keep pushing, keep pushing, and you run out of resources, and you really have to, for example, raise again, and then you experience a down round, and just to create a more disruption to your business than otherwise it would be. So I think knowing what you're good at, but on the other hand, be open-minded and always be ready to, pivot and take other people's suggestion about where to go is very important.
Yeah. And to see this lens from like specifically this audience, to see it from a perspective of women, how do you think like this is a very loaded question. It's not only about fundraising and building credibility and confidence in the market. How do you see, first of all, women come, we're a small segment. We're not we're just, I feel like we're just tip of the iceberg right now on entering. Not to say that we have a lot, like we have a lot to offer, but in terms of like what do you have, at a large level to tell this audience about women who have pitched to you and that you have in your portfolio? What has helped A, to bring the credibility and confidence, and as well as, getting funding?
Mhm. Yeah. Well, I think a credibility itself honestly comes from a lot of fronts, but it's also something that I like to tell myself is that um where do we get credibility? We honestly get credibility from doing the work. And when I look at successful founders, when I look at, founder who successfully raised, that's because they did the work. They did the work of assembling a good team. They did the work of building a good MVP. They did the work of putting together a good story. And that story including, market research of the market size of, their competitors, of their go-to-market strategy, of the kind of roadmap, the kind of milestones they want to hit. And honestly, those kind of hard work will flow through. It will reflect in your confidence, in your storytelling, and it also will becomes the confidence that investors have in you. So I think honestly, like for me, like I wish I had some secret sauce, but I realized that for me at least, like the credibility and confidence and all of that really just is founded on doing the work.
Yeah. And so I'll ask you a personal question there, Cece, as a woman investor. We know that that number is also few and far between. And so, speaking from your own story of being in a male-driven world of investment, what has helped you, other than the work you do? We know women are hardworking and we keep doing. What has helped you personally to, navigate this world as a woman investor?
Yeah, thanks for the question. So, yeah, I definitely feel that the world, unfortunately, is still dominated by male, both from the investment perspective or even like in the energy sector, like from the deployment perspective. Like a lot of the, the people who are actually developing energy projects are also just male. So for me, I feel that there are a couple things. So first of all, I definitely try not to kind of, you know, feel that I don't belong here. Whenever I go to a room, whenever I sit at a table, there's a reason I'm there. And when I show up, I show up. I show up with presence. I show up with my story. I show up with, the confidence, the credibility, just as we said, because I did the work. So that's number one. That just don't be afraid of taking the space and we belong here, you belong here. And then the second thing I would say is really be your own advocate. I think a lot of times, like sometimes we let other people tell our stories, and some people look at our resume and it says that, oh, you're a, let's say, finance person, or you're a technical person, or you're a whatever kind of person. But it doesn't have to be. You have your own story to tell, then tell it. Don't let other people pigeonhole you into some specific box. Don't let other people tell you that this startup doesn't work or you cannot fundraise or you have to fundraise in certain ABCD way in order to get funded. No, you can create your own version of reality. But just make sure that you know what you're going after and be persistent if that's truly the problem you want to solve.
Yeah. And when you navigate these rooms, how much, and the same goes for founders, like the preparation that goes in preparing and being able to answer questions versus, we all know that there are people who are super confident and they can go in without any preparation and BS their ways in. What do you think, like specifically for us women, how can we like navigate between like not over preparing? I feel like over preparing kind of almost creates a
Mm,
like a nervousness.
mm,
Whereas like when you enter with that, okay, if I don't know, like
mm,
how would you advise women from that perspective?
yeah. Um, So I think a couple things. Yeah, I also don't encourage people to over prepare because honestly, like if you know your stuff, you know your stuff. Like there's you can spend unlimited time to prepare for certain thing, and at the end of the day, you'll probably just make yourself too stressed out and too nervous. So definitely don't do that. But also make sure that you know stuff, and a lot of time we do. And I think to answer your question in terms of um kind of differentiating whether you are prepared enough and with I think you're asking about certain people who tend to oversell themselves and honestly I feel that it's I don't know like for me I kind of feel that it's not too hard for me to tell when someone is simply just overselling their stuff because once you get deep into the conversation, once you scratch the surface of certain problem, you can see whether that person know their stuff or not. And honestly, that's probably also one of the skill as investors we should have is that asking the right questions and asking deep questions. And that's part of our due diligence process so that we knows whether that person is just, telling something that sounds good on surface or that person actually know their stuff. And I think, as a woman, um, if you truly know your thing, know your business, then don't be afraid because again it's okay. It's okay if you don't connect with that one person because there's other investors out there. And don't let, just the one no or don't let just the one bad pitch discourage you too much. Because again, if you feel that this is a business worth building and someone is going to give you an opportunity, and this is Silicon Valley, honestly, I feel that you just need one yes, and that's it.
Yeah, no, I love that. It's just part of our entire experience is like how do we accept failures and what, as a founder myself, I understand that no's are gonna come, but they are not failures. You yourself are pitching like a larger idea and continuing to show up to present that and believing in yourself to I love the idea where you said there is a yes out there that you're working towards. So I love that. With that, Cece, I'm going to take a little kind of detour and talk more about market insights and perspectives as an
Mm,
investor. So, from your vantage point as a venture capital investor, what are some of the key institutional capital areas that are there? Definitely, clean tech is one, and then because WCS and our founders are like they fill so many different categories within sustainability. Can you give us
mm.
insight from your side on where do you think funding is getting allocated and is accelerating?
Yeah, definitely. So I think depending on the stage of the company, there are actually still a lot of kind of, capital opportunities going on there. So for early stage company, especially if it's still at the R&D stage, there are actually still grants that can be unlocked at different level. So now obviously a lot of the federal grant is, disappearing, but there's still a lot of state grant or still grants issued by corporations that are available. And also there's grants outside of the US that can be tapped especially for companies who are interested in, for example, going to market in Europe. And there's actually a lot of the European grants that we encourage startups to look into. Now, from the kind of the private capital raising perspective, so in addition to equity, also encourage startups to look at debt. But then that's probably a startup that's more mature because in order to get debt, usually you need some sort of cash flow or optical agreement, some sort of things for the lender to underwrite. So that's probably more for the startups that has some sort of pilots agreement in place. That's definitely a venue to look at. Now, from the equity capital provider perspective, we see definitely the traditional venue for startups to raise money from, but more and more there's also CVC, corporate venture capital, that are more interested in looking into a lot of the early stage startups as well. I was actually just looking at the data the other days, and I believe like even just 2 years ago, only 10% of the climate tech deals have CVC as part of the cap table. But last year, I believe that number doubled. So more and more corporate VC are actually looking into a lot of the climate tech companies, and partially is for their own sake as well, because they know they need to diversify their business model. And the earlier they get involved in, partnering with, climate tech startups, the better that they have a chance for them to work with great startups and potentially acquire some of the great technologies as well. So there's definitely still a lot of venues to raise funding for startups.
Yeah, that's great. And then we can't really miss the whole like the AI bandwagon that's going on for the last
Yeah.
few years. And so, in terms of your experience working with AI driven decarbonization solutions out there, where do you see, in your purview, where AI is creating the most impactful, climate um, interventions or solutions?
Yeah, it's actually such a interesting question because I feel that based in Bay Area, sometimes the AI is what you think about like every day, or sometimes you realize like outside of the Bay Area, maybe it's not as penetrating as it is. But just let's just say in the climate space, I feel that there's at least two sort of trends that I'm seeing. One is for company that's not really building something specific about AI, but just because now, as we know, AI tool has become so powerful, like their workflow get become more efficient because of AI. Like for example, I'm talking to some companies who are building essentially the software layer of VPP, and then they said that back then it will take them probably a team of 5 engineers in order to build an MVP, but now it's really just one guy with cloud code,
Yeah.
and then in a month, and they have the solution out there. So that's definitely just the one obvious use of like all the AI from the startup development perspective. But more specifically, from the climate vertical, I feel that there's quite a few interesting trends that are going on right now. The one thing I would say is definitely the application of AI in grid, so the power grid system.
Yeah.
Because right now we're seeing essentially a lot of energy projects need to be built, whether it is to power AI essentially, or it is just to power the electrification and the manufacturing onshoring. We're seeing more power demand. That has created a lot of constraints in grid. And the traditional grid was operated in a way that's, honestly, a very static system. But with AI, with essentially AI mobilizing a lot of the data that actually sits in the system but not being used in a way, there's a lot of dynamic programming that can be done to really optimize the grid system so that we can unlock a lot of the capacity that's already existed in the grid. So that's definitely one area I'm very excited about. Now, another area I'm very excited about is actually material discovery. So that I feel that is a whole trend that perhaps is going to be accelerated by AI, but hopefully in the future further accelerated by quantum computing. Because to discover new material, there's a lot of parameters that like, has to be solved in order to figure out the right combination. Um, and especially if we talk about climate, right? Like a lot of sustainable material, it has to meet a lot of, criteria so that it's not just sustainable, but also functionally useful. And that just require a lot of permutation, combination, and a lot of optimization in order to figure out the right combination. And that's something I think AI is already playing a huge role. And is going to continue to drive more innovation in this direction.
Yeah.
So tons of things going on, but those are just, I guess, two examples I want to highlight.
Yeah, and so more question. I know there are some more questions coming up, and I'll ask people to unmute and ask those questions. But I have from my perspective on the material perspective, do you see there are more physical based AIs that are helping like discover that it's not only software that is informing
Mm,
that, but people
mm.
are creating physical tools that are run by AI to help create those, nuanced and clean materials.
Yes, yes, definitely. Like one of the company we invested in last year was a company that's building a reactor. So it's kind of like electrolysis process that can turn essentially air and water into just new chemicals. And because their reactor design is relatively novel, so they also have to not just work with, for example, stack engineer to understand the existing reactor design, but also actually just iterate through different design stages to come up with, whatever solution that fits their process. And they have used, like AI and partnering with other startup when they're basically coming up with all different reactor design, and they have hugely reduced the time that's usually needed to essentially go through this process. So I'm definitely seeing a lot of the AI solution being used to develop new tools that can be further used to enable a lot of the solution.
Yeah, that sounds like an exciting time where founders can focus more on like not doing the hard labor, but
Yeah.
utilize things in order to do it. With that, I'll ask Isabel Bart if you want to unmute yourself and ask your question.
Sure. I have a lot of questions, so I'm not going to ask all of them, Cece. But yeah, I mean, my question on the chat was more about usually when we work with pre-revenue startups, which is a lot of the startups I work with, and it can be anywhere from massive infrastructure like marine energy, or some of them might be like even SaaS, so that's very different. But usually, like I have not personally seen any VC that will invest in pre-revenue. So to your point earlier, we usually encourage them to seek grants, for example. But I wanted to ask you if you've seen that case and what would make a VC potentially invest in pre-revenue. That was one of my questions. And then I have maybe later questions for the future of funding and venture philanthropy and some of these other things. But
Yeah,
I'll
sure. Yeah. Um, Personally, we have invested in pre-revenue company. So I think first of all, it definitely depends on what kind of VC you're talking to. Um, Pre-seed VC usually are more risk taken than some of the VC who tend to lean more on like Series A plus stage. So that's number one. And then number two, I think from the again de-risking perspective, I usually encourage startups to build a large sales pipeline. Because one thing is that, okay, this is the amount of sales I have, this is the amount of revenues I have. But if you don't have it, which a lot of startups honestly don't, because they're B2B, right? Like even if you're starting a pilot, maybe that pilot is free pilot. All you have is, some LOI from the customer, not the real revenues. So in order to offset that, really having a robust sales pipeline and having that funnel to show investor this is how the revenue is going to trickle in, by what time, and this is how it's going to scale, is the way to unlock this kind of capital when you haven't got revenue yet.
That's a great feedback for this. And then I'll continue. If someone has questions about like early stage investment, please feel free to unmute and ask. But I will continue asking questions about like more market insights from your side so that we can hear. We have a question from Banu. Do you want to unmute and ask your question about expectations?
Sure, sure. Yeah, a quick question about your expectations from an early stage startup, especially in the pre-seed, seed round versus, I understand in Series A and B, like the commercialization becomes a lot more important. But I'm curious, how do you like differentiate a company at that stage where it's basically most of the time just an idea?
Right, yeah. So just that, as you said, as Series A plus, usually there should be some commercialization traction. And for Series A, like there should be revenue, and usually it's probably 1 million or if not more revenue. And in terms of pre-seed, a lot of times you may hear people who say that, oh, we bet on founders. And it is true because that is who you're betting on when you're so early. And we know, like, even if you're bringing a great technology, even if you're bringing a great product, you probably need to find a new market at a certain point. Or maybe if you identify that market, but it turned out that, the market is moving a different direction that you haven't anticipated. So that's why for pre-seed, it is important to have a thesis. It's important to have done your market research and know what you're going after. But ultimately, you have to, show investors that you are the right kind of founder that people want to bet on. Now, you may ask, how can you show that? So a couple things, if I want to make this more tactical. I think first of all, the storytelling perspective is very important. Like knowing your market, knowing your customers, knowing that you have a plan is very important. Now, second of all, a lot of times when investor invest in founder, it's not like, oh, you pitch to them and tomorrow they write you a check. Sometimes it's a 6 months conversation. And a lot of time during that 6 months, investor want to see progress. So there's different ways to founder show progress. You can see the product improvement, you can show, the additional investor you have gathered, you can show the additional pilots, or maybe you can even show investor, oh, 6 months ago, I was trying to target at this market, but after 6 months, I made like, let's say 50 calls and I realized, oh, this market is the one that I should focus on. And I had developed a lot of traction. So that kind of progress also will give investor the confidence that you have, the ability to execute and execute fast.
Thank you.
Great. We have a question from Na, if you want to unmute and ask your question about investment perspective.
Yes, thank you so much, Cece. This has been very, very insightful. So I'm asking from the perspective of an investor. So you mentioned that asking good question has been very important during the due diligence process. So what are the examples of some high value questions that you ask founders in that process? Thank you.
Great question.
Yeah, thanks for the question. I think usually for me, I usually almost like I want to get a sense, like I want to really go into that person's brain to understand why you're building this, what you're building today, and where you want to go afterwards. So it's like past, present, and future, I guess. So a lot of times I would start with why, like what motivates you to do this, and what's the funding history, what's your background, what's your technology, and all that. And then in terms of today, I really want to understand, the technology, like the product, like how it compares to other competitors in the market, and how do you see that adding value to your customers? Have you talked to enough customers to understand the pain points of the customer so that you're not just building a great technology, but actually solving real problems? And then, of course, where you want to go next? Do you just want to kind of, oh, like I have this great technology from the lab and I want to build a startup around it, or you actually have some sort of plan to say that this is the type of like industry we're targeting and this is the kind of exit that we're expecting and all those sort of things. So I'm not sure if I answered your question, but basically just depending on the startup, that trying to almost like visualize like what that pathway should look like for them.
Great. Yeah. Eleanor, you have a question regarding female founders and trade equity?
Yeah, thank you, Cece, for the answers so far. Really appreciated the session. So I saw a statistic about female founders, specifically in the biotech space by Series B, ending up with on average 40% equity in their companies, where male founders ended up with on average 85%. Is this largely because female founders are first-time founders? Is it that stark of a funding environment for female founders? And have you heard similar things in funding stories for female founders?
I actually have not heard of this statistic. It is definitely very stark. I cannot speak to the statistics. I wonder maybe that's just because there are fewer, I guess, female founders out there. And also like biotech is a hard space, or maybe some structural issue there. I don't know. It can also tie to what we just discussed, right? Because there's also similar data that show that usually women, for example, don't negotiate their salary when they get a job, or sometimes women shy away from advocating for themselves in terms of promotion and all those kind of things. So I also wonder whether that has something to do with those as well.
And Cece, so I have a follow-up question on that. Like, if you want to influence the capital allocation and investment decision, and not to put on, like I've been told many times, like not to think of yourself as a woman, but irrespective of that, for this specific audience, what do you think are some of the, skills and capabilities you've mentioned, knowing your craft, knowing your work, all of those, but from a capital perspective, what can how can you sound better? What can you inform the audience while you're pitching in order to influence?
Yeah. So the communication skills, the presentation skills are definitely very important. I feel that sometimes I also find it unfair. Like even if you know your craft and even if you have done your homework, it's not enough to just say that I know. I have to be able to sell it in a very convincing way. But unfortunately, that is the case. And I have been doing a lot of that communication classes myself and I encourage everyone to do it. Sometimes it is a little thing about, your tone and how you structure your story and how you answer your question. And sometimes shorter is better than longer, and all of those little things that can make a difference. And I think, like for anyone who has done business development or do sales, that a lot of times deals get done not simply just because you have the best offer. Sometimes it is because the trust. It is because a lot of the, unspoken element. And that's why I always encourage people to learn to sell because whether it's selling your startup, whether it's selling your product or simply selling yourself, this is definitely a lifelong skill that everyone should develop.
Yeah. Before I get to the 2% female founder ventures, I know that's a number, and I can personally tell you like that has more insights than just venture funding. But like I'd like to continue talking, Cece, about like the leadership challenges that women we're not only like pitching as salespeople, we're also running teams and doing so many more and learning so many more things and wearing many hats as founders. So, what are some of the things you've learned in your, as a VC hat, investing in like high stakes? What are some of the things you would bring to this audience has helped you kind of being a leader in this space?
Yeah, I would say being an investor, probably one thing that I definitely learned to do is to navigate ambiguity. And I want to say that's probably true for most startup founders as well, because there are just so many uncertainties down the road. And for venture investor as well, there are just so many uncertainties when we bet on startups. And a lot of times we have to navigate the uncertainty both ourselves as an investor and also with a startup when they scale their business. So I think one thing I learned to embrace over time is really just to embrace that uncertainty. Like sometimes you just cannot have the perfect decision. Sometimes you just have to make a call with incomplete information. And a lot of times speed is better than being perfect. And you just have to make a decision, tell your team that this is why I made the decision and be accountable for that. If something went wrong, then own it. If something is great, then continue working on it, improving the process. And ultimately, it is about just keep moving because there are tons of decisions you have to make as a startup founders, and just have to do it, own it, and continue refine your process so that you always do a better job in the future.
Yeah, I love that. I recently heard on a podcast of a Navy SEAL, like the biggest quality that they see is like in the face of the training hardship, the people who succeed are the people who said, I can do this, like the next step and not look at. So let's address the elephant in the room is the 2% venture founding, which, is a statistic out there. I personally know that funding comes in various formats. And we don't always have to look for venture funding. In the early stage, we can have friends and family round, we can look for angel investment, we can put in our own investment and stuff. But if you can speak to just raising funds and that we don't have to just have a tunnel vision. I know you are a venture capital firm, but as someone who understands founders who have raised funds in different formats, can you speak to the funding landscape and the journey of, not only women founders, but founders in general? How do you evaluate the different, rounds that they've gone through in order to make that decision to give funding to a given company?
Yeah. So you mean like how do I give funding to startups? Or how
Yeah, no, first, I think the first part of the question is that the 2% funding that is available from venture capital, it is just a statistic number there. And we know there are other formats of funding, which you mentioned. There's grants, there's all of these. So if you can speak to that piece first on the types of fundings, and then what you've seen when people come to you for a VC round, do you evaluate how they have sought fund and raised funds in the past?
I got you. Yeah. So definitely, as mentioned, there are different type of funding. So grants is good because it's non-dilutive, but grants also comes from with its own caveat because it can be very administration heavy. Like a lot of times you need to file a lot of report, and a lot of times, like I seen startup who got funding from the federal government, but that funding basically was gone. So there's also definitely some sort of cost they have to pay, even though it's kind of like free lunch. So that's on the grant side. And on the equity side, I think everybody kind of know it's dilutive by definition. So valuation is important. And also like especially for earlier stage startup, it's not always that higher valuation is good because if you have a high valuation for this round, that just means that investors expect more from you. They want more milestones. They want even faster scaling. And if you cannot hit that milestone in the next, let's just say 12 months, 18 months, then you might experience a down round. A down round means that your next round of valuation is lower. And that can be very, very disruptive for a startup. So that's why I always encourage startups to kind of have a reasonable valuation in mind in terms of, what kind of equity investors they want to bring onto the table and how much they want to raise. And then we also talked about debts a little bit. So I think debts again, it has its own caveat because this is cash flow. So that's why I usually recommend it only to mature startup and a lot of time at the project level, rather than at the startup level. Um, Now going back to I think your second question regarding whether we pay attention to the funds that the startup have already raised, definitely, especially in terms of who are already on their cap table. Because for every investors, how much fund they have already raised and what's your fundraising plan will also impact essentially returns of your current round of investors. And that's why even for AI investors, sometimes even though the kind of the return potential tends to be high, but they also need to do the math because for a lot of the AI company, they will raise a lot of big rounds and that capital get diluted very fast. So that's just the kind of math that the investor will do in their heads as well. So for startup, when you raise funding, also try to wear that investor hat and think about, okay, whether this investors that I bring in to this table will be some investor that can attract or turn off more capitals in my future rounds. So that's just something that I always encourage startup
Yeah,
to think about.
yeah,
So.
absolutely. Yeah, thanks for giving us insights into your thought process on that. I believe, Nina, you had a question about how macroeconomics affects, the funding landscape. If you want to unmute and ask your question.
Yeah, Cece, I think you kind of touched on this with various different types of grants, but I'm just curious, like, what are other methods to like help for businesses when they're pitching their startups to VCs or other institutional investors, and how they can go about circumventing those like macroeconomic like limitations or hedge those risks?
Yeah, I gotta say I don't feel that there's good ways to circumvent it. I think they kind of just have to have a plan. Like, for example, a lot of the startups that we're seeing right now, originally they were trying to build their manufacturing. Like I guess right now I'm thinking about a company that's building biodegradable plastics. Originally their plan is to have a new manufacturing plant in China, but just because of all the uncertainty regarding geopolitics risk, now they're exploring options in Thailand and the other part of Southeast Asian market. So I think honestly a lot of times you just have to adapt. I think that's probably one of the key trait that we're also looking for in startup founders is that whether you're okay with all of those curveballs that thrown your way and whether you can adapt quickly enough. And That's why sometimes I think, back to what I mentioned, an investor like to invest in founders, right? Because we know it's not going to be an easy journey. And a lot of times a startup fail, not because the founder is not smart, not because the idea is not great. It's simply just because it is really hard. And at some point, if you compare, building the startup to some other great options that that founder may have, they just decide to quit, which is totally reasonable. But ultimately, it is those who stay ended up becoming successful. So that's, like sometimes what investors are looking for. It is that kind of grit. It is that kind of resilience and persistence.
That makes a lot of sense. Thank you.
Great. And I think we have time for one more question. Now, if you want to unmute yourself
Yeah,
and ask the question.
Thank you so much. My last question is, what goes into the math of startup evaluation, especially for the first VC round? Thank you.
Oh, we'll go into the math. Yeah. So I would say usually it is just kind of the return, right? Like if you think about multiple, like it is what kind of returns I will get from the money you put in. And that has, different parameters that, like people will think about. So usually when you think about, like return, it's kind of like a multiple on your revenue because a lot of the startup, they don't have profits or it's no EBITDA, all of that. So it's just revenue. Now, how do you measure revenue? Like we know this is the early stage, there's so much uncertainty. So the best thing you can do is just to make a projection. And that projection to me usually has two dimensions. So there's, the top down, you want to think about the market, the total market share, how much the market can grow, and how much percentage can you actually realistically grab. And that comes down to the competitive landscape, your motive, defensive edge, and all that. And there's also, the bottom up, right? Like if, for example, I'm selling to, let's just say, textile company with a new sustainable material, then how many textile companies are there? Like how much material can I realistically sell? And then using that to just do a kind of like bottom up analysis about the market size. So with that, you sort of have a rough idea of your revenue. And then another thing, I guess, yeah, maybe I should call out is the multiple, because for different industry, the multiple is very different. That's why people like to invest in software and AI company because their multiple is high. Sometimes we're talking about double-digit multiple, but for a lot of the traditional, type of hardware company, like the multiple is just 2 or 3. So that's simply just a fact. So that's just another thing that kind of go into the valuation and also the essentially the MOIC of the financial returns.
Yeah. Thank you, everyone. With that, we'll wrap up the questions here. And feel free to connect with the folks who are here who've dropped their LinkedIn and with Cece on LinkedIn. And I wish you all that you have a really successful road ahead on launching your companies and seeing success. Your success means success of the Entrepreneurship Committee at Women in Cleantech. With that, I'd love to thank Cece for her valuable time and her interest in supporting women and this audience to learn more. So thank you so much, Cece. Do you have any closing remarks you would like to share with us?
Well, thank you everyone for your engagement. I feel that we had a very, very engaging crowd today. So thank you for your interest in climate. Thank you for your interest in being a startup. We need, more people like you. So let's keep up the fight.
Thank you so much. And I encourage you all to please become a member of Women in Cleantech. Your membership means a lot for us. And then come and volunteer and support us. This is an organization run by volunteers. And I'd like to thank today's volunteers, Nina and Ashi, for making this a success. And so really thankful for you all joining and making this a huge success. Thanks all. Bye-bye.
Thank you. Bye. Take care.
Bye.